So friends, welcome back to real currency. We have already talked about the difference between paper currency and real currency, and we have come to know that over a period of history how paper currency actually evolved. Earlier, a lot of people were actually using the real currency, which was maybe the barter system, which eventually evolved into using of nickel and copper, and then finally it evolved into using of gold and silver. And then later it decommissioned or it got relaxed, and then people started using the currency which the government actually gave it as an assurance of the backed up gold. And then finally gold also was actually relaxed further, and government could print as much amount of fake currency as possible without having the required backing of gold or any other produced by the nation. So what are the ways you can buy this real currency? So real currency also you can buy in a digital form or a paper form, and another form is a physical form. Now in the paper form there are various ways again. The first way is ETFs, as you all know. There is mutual funds, gold mutual funds, and then there is this digital gold which is also available. And when you come into the physical, there is just physical gold. Obviously, you go and buy physical gold. And there is one more avenue where you can invest gold, that is the SGB, that is the sovereign gold bond. This I'm keeping it a little apart from paper as well as the physical, because this is sovereign, right? So let us see what are the best ways where you can actually invest into gold, and what are the drawbacks of each of these methods. So when you talk about the paper method, you have ETF, mutual funds, and then you have digital gold. When you say digital gold, you actually use these platforms like Safe Gold, and you have Tarnished digital gold as well. And there are various other platforms which actually sell you digital gold by giving 3% of GST, and then you can hold this digital gold. But if you sell this digital gold, set the equivalent number of grams whichever you purchase by the digital method, we can sell this, and then you can actually redeem in terms of physical gold. That is what is claimed. Otherwise, it is already, the gold is already being held in a vault by Brinks, or it is very secured in a vault by very responsible parties, and that is the assurance which this application actually provide to the user of this particular application. Is provided the guarantee that he will get the physical gold upon redeeming it. Or if you don't want to avail the physical gold, you can just sell it in the market, and the selling price is usually less than the buying price. It has almost a difference of 6% as a matter of fact, and I'm not sure by losing out on the selling price, is it really worth to hold digital gold or not, right? You're actually spending 3% on the GST, and then while selling it you again lose 6% or 9%, and then totally it comes to around 11% of overhead cost for purchasing digital gold. And if you want to get it in a physical manner, you pay for the making charges, and then after paying the making charges you can get physical delivery of your gold. So that is about digital gold. And then when you come to ETF, you have various ETFs like HDFC ETFs, you have ICICI ETFs. All the banks, as a matter of fact, have their own gold ETFs. It is an exchange traded price which actually tracks the spot prices of gold, and all of these have their own methods of calculation. Each of them has their own value, but the difference in the value is not much. It is like few of them are selling like for now they've reduced the grammage, in fact, for per unit. It is costing about 45 or 50 rupees for the gram, for the milligram, in fact. So it has broken down the gold into milligrams, and selling gold ETFs in terms of milligrams. So that much of breaking down has been done in ETFs so that people find it easy to buy gold from the ETFs. Now, when you talk about ETF, there is this STT charges, this is a standard charges whichever when you buy stock you actually pay to the brokerage and things like that. Those kind of charges are there. There is no GST and making charges when it comes to ETFs. And when you talk about gold mutual fund, this gold mutual fund actually invest into the ETF, so it has additional overhead. You have to pay expense ratio, which is very, very low anyway when it comes to gold mutual fund. But why would you spend overhead for gold mutual fund when you can have a demat account and actually reduce that overhead and purchase ETFs? But nevertheless, if you do not have a ETF, if you do not have a demat account, you can go and purchase gold mutual fund. But nevertheless, I would suggest you create a demat account if you do not have, so that you can go for the gold ETF instead of gold mutual fund. Now, between these three categories, that is the digital, the gold mutual fund, and then the gold ETF, which is the best? So if you look into it, when you talk about digital gold, you need to look into the liquidity aspect as well, right? If I sell digital gold, it takes me around 5 days to encash the money, and moreover it has an overhead of losing out almost like close to 10 or 11% upon the transaction. So if I would now digital gold only ensures that it is not subjected to theft. That is the only benefit I see in the digital gold. So digital gold can be compared with physical gold. So I would much prefer having physical gold being stored into lockers, because even in digital gold, after few number of years, up to 4 or 5 years, you have to anyway pay the locker charges. So why not pay locker charges upfront when you just buy the physical gold? And nevertheless, in physical gold purchase, you anyway have to expense 3% GST plus the making charges depending on the grammage of the gold, depending on whom you're buying it as well. If you are buying it in cash, I think a lot of there are gold merchants who actually can only charge you GST without the making and still sell you gold if you're buying of a higher grammage. But if you're buying for lesser grammage, then they may charge you extra, like GST plus the extra making charges. So it is advantageous to buy higher quantities of gold from non-branded gold merchant. But if you're buying from branded merchant, compared to digital gold, I would prefer the physical gold instead of digital, because you have an assurance, you have something to hold, and in digital you don't have anything to hold. But if you're looking at it from an investment perspective to sell, then with respect to digital gold, I am sure that gold ETF is much better than gold mutual fund, unless you do not have a demat account. So gold ETF is in fact do not have any GST nor making charges, and it tracks the spot price of the gold nevertheless in the market. So if you are looking to invest into paper gold, in my opinion, you have this gold ETF, which is much favorable. And then you have, if you are looking into physical gold, you can buy directly the physical gold. Now remains the sovereign gold bond. Now sovereign gold bonds have this locking period of around 5 and then 8 years. In between you cannot encash sovereign gold bonds. So this gives a rise of illiquidity. I mean, it's not quite liquid for wherein you need cash when the equities are down, gold may be high, and you're not able to withdraw gold because you have kept it in sovereign gold bond. And it, on top of that, you may be getting 2.5%, but after considering your tax bracket, you may actually calculate to 1% to 2.5%, depending upon your tax bracket of like 30 or 35 to the range of whatever 10% or 5% tax bracket. You can calculate it, take a notebook and see how much actually interest you're getting on sovereign gold bond. And is there any sovereign nature of sovereign gold bond? Is there any backing of the gold? Will you get gold in return of by selling this sovereign gold bond? If not, then why not directly invest into gold ETF? So you just have two categories: gold ETFs and physical. I may be saying that physical gold may be subjected to theft, but you can buy a very good locker. You can keep it into the locker, or you can keep it in the safe in your home, where you keep a lot of valuables anyway in the home. So why not gold? And not to a large extent anyway. Out of the entire portfolio you might be having of equities and real estate, I prefer having almost like 10% in physical gold and 20% into the liquid gold, which is gold ETFs, so that you can sell it to buy other paper assets like equity whenever it's required. So these are the various methods I wanted to share across to you. If you have liked it, please share it to as many people as possible. Please subscribe to this channel so that gain from all my expertise which I have gained over the past 12 years into the stock market. And believe me guys, there are a lot of influencers out there who are actually promoting sovereign gold bonds, and look it with an open perspective. I would not say that sovereign gold bond is not a good method of investing where you can put some amount into sovereign gold bond, but for me, as my perspective, I'm looking for my investment perspective to buy assets, equities when golds are high, and then have some physical gold as well, with the consideration that whatever paper assets are there are not actually having any backing. So from that aspect, I would have 10% into physical gold. See you.